Retail stocks, the Warehouse Group and KMD brands have hit historic lows. Where to now for the woeful sector?
They really need to develop a strategy and understand what their brand proposition is relative to some of these competitors like Kmart. You've also got the emergence of companies like Costco coming into the country, which doesn't help either.
It's Friday the 23rd of February and you're watching Markets with Madison. The Warehouse, where everyone gets a bargain, including Tahua Partners, who just bought Torpedo 7 for $1. After the Warehouse Group acquired it in 2014 for $55 million. The outdoor gear business that sells bikes and boards turned out to be its worst performing brand. When I spoke to the chief executive, Nick Grayston, in September, it was pretty clear it was going on the block.
In Torpedo 7, there's a number of different issues. And so, firstly, there's a bunch of margin issues. So, changing the product mix, for example, to higher margin categories like outdoor clothing, for example, and footwear, as opposed to, certain lower margin things like bike parts and things that are in demand. There's also a whole bunch of cost control issues.
Investors are obviously unimpressed. Its share price is down 51% in a year, making it one of the worst retail stocks out there. So where to now for the Warehouse Group? Kieran Carling from Craig's Investment Partners has some ideas. Hey Kieran, thanks so much for being with us.
Thanks for having me on.
This sale was definitely a shock to me this week. Was it a shock to you?
Well, we saw at the Warehouse's last result that they flagged Torpedo 7 was under review. And this came off the back of the $22 million loss that it delivered in FY23. So it's not overly surprising, although it's clearly a disappointing result for shareholders, given the Warehouse paid about $83 million for Torpedo 7 back in 2015. They're now selling it for $1. And that includes about $50 million of inventory on the books. So it's not an ideal outcome, but it was somewhat expected.
Yeah, it certainly doesn't look good on paper, that's for sure. But as you mentioned there, it was loss-making. So do you think it was good for the Warehouse Group to carve this one off?
Yes, ultimately, I think Torpedo 7 has been a distraction for the group, and it's one that they just don't need at the moment. We've seen a number of other retailers come out with downgrades at the moment. The consumer's doing it tough. And I think if the Warehouse can just focus on their core operations, being the Warehouse Stationery, and Noel Leeming, that's probably a good thing.
Yeah, we've heard from, as you mentioned, a number of retailers. We had Hallenstein Glassons Holdings this week saying that their sales were flat, which wasn't actually too bad compared with KMD Brands, the owner of Kathmandu and Rip Curl, revealing that their 6-month sales were down by 14.5% before they released their result later this month. What do you make of that? Is this kind of a struggling consumer across the board, or is this poor management in these companies?
Yeah, well, look, I think it's a bit of both. Obviously very tough macro conditions for these cyclical retailers. If we look at the examples you've raised, being the Warehouse and Kathmandu, it does appear like there are some structural issues emerging within these companies. So, looking at Kathmandu and how that result has contrasted to what Macpac is seeing, owned by Super Retail, Macpac is clearly taking market share there, and the core Kathmandu brand is underperforming the wider retail sector in both New Zealand and Australia. So that is quite concerning. And then I guess just thinking about the Warehouse, Kmart the other day produced a record result. That's obviously a main competitor for the Warehouse Group. You've also got the emergence of companies like Costco coming into the country, which doesn't help either. And then you've got companies like JB Hi-Fi, which are competing heavily with Noel Leeming and focusing on a rollout in New Zealand as well. So I think, there is a combination between tough macro conditions, but also some structural issues with these companies where they may be losing market share.
So if you were the Warehouse, what would you do next? Do you just focus on the red sheds? Do you go harder on Noel Leeming? What's the solution?
Yeah, well, that's a tough question. I mean, it is interesting to see how the strategy has changed in recent years. Certainly within, the red sheds, which are, the majority of the group, the red sheds and Noel Leeming, there has been more of a shift towards grocery. Now, this is something that has been in the news a lot. It was not overly successful the first time around when the warehouse tried it. But I think, they really need to develop a strategy and understand what their brand proposition is relative to some of these competitors like, Kmart. And that'll be important in, growing profitability going forward.
Yeah, with grocery, they're already playing in that space, right? So they already have some of those supplier contracts teed up. Should they just go harder on that and position themselves as a grocery retailer with other retail on the side, maybe?
Well, again, it depends what the long-term strategy of the group is. Grocery is a very low margin side of the business. And so, it depends how well the Warehouse Group thinks they can compete with the existing supermarket chains. That historically has been a very tough space to compete in. So, I would have thought they'd be better off kind of steering away from grocery and kind of focusing on the core offering.
You and I both know, Kieran, though, that the Warehouse Group has had many rethinks of strategy and it hasn't always been executed perfectly. They've done numerous restructures under this current leadership over the years. Do you have confidence that they can actually deliver on a reprioritisation, so they call it?
Yeah, look, some of the decisions that management have made in recent times, particularly around, the market.com, One Day, Torpedo 7, they have been concerning. But what I would say is that at times like this, particularly when the whole retail sector is under pressure, it does force you as a management team to pull levers that you wouldn't otherwise need to pull. And the reality is the warehouse has a significant store base in New Zealand. They have a well-known brand, and they have some ultimately very strong underlying businesses. So I think, while there has been some volatility in the decisions that they've made over the last few years, focusing on their core, I think will be a very good thing for the business going forward.
The share price is down 51% for the past year. Can it get any worse, or is there surely only upside from here?
It can always get worse. If you look at where the warehouse is trading currently, it's still at about over 12 times forward PE, which compares to a 3-year pre-COVID average of 10.8. It always becomes hard to pick the bottom at this point in the cycle. But what I would say is, with some of the downgrades that have come out more recently from a number of retailers, the share price reactions have been more subdued. And you have to consider the fact that the market does price in a forward view and a forward outlook on how these businesses will recover. So it does feel like we're approaching the bottom, but never say never.
What's your forward outlook for the macroeconomics of retail over the next, say, 6 months?
Yeah, look, I think over the next 6 months, conditions are going to remain pretty challenging. Part of the reason that consumers are pulling back in their spending is due to higher interest rates. We've seen a lot of inflationary cost pressures, and I don't think those are going anywhere in the near term. However, if we do see some rate cuts this year, and maybe some slight lift in house prices, then that should give consumers a little bit more confidence to get out there and spend.
Thank you so much for your time, Kieran. A very interesting sector to watch this year, I think.
Absolutely. Thank you very much.
I want to know what you think about where these retailers are at. Is this all the economy's fault, or are they disappointing for other reasons? Let me know. Now go put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.